Good morning, hello, and welcome. Are you a student eager to dive into the world of cybersecurity and risk management? Or an industry expert looking to sharpen your knowledge of vendor risk in today's digital ecosystem? Or a curious mind fascinated by how organizations manage trust in a connected world? Then this video is just for you. Join me as we explore the fascinating and crucial world of third party risk management, also known as TPRM, where security, trust, and accountability converge in the age of outsourcing, cloud, and digital transformation. This is part 3 of the series on TPRM. In part 1 and 2, we had covered the context, the drivers that makes TPRM a must-have in modern security, and covered the key components of TPRM framework tailored for digital and operational resilience. We'll continue in this journey and we'll break down and demystify the key pillars of TPRM, including the cyber security risk commonly posed by third parties from unauthorized access to supply chain attacks. We'll also look at the tools and technologies that empower organizations to assess, monitor, and manage vendors effectively. We look at TPRM in the context of leading cybersecurity framework like NIST, ISO, COBIT, and others. We will then try to understand the best practices that makes TPRM practical, sustainable, and audit ready. We'll do a deep dive into the top laws, regulations, guidelines, and framework that governs TPRM in BFSI sectors, namely the DORA, the RBI, the GDPR, CERTIN, etc. We'll do an analytical comparison of TPRM expectations across the global standard from FFIC or CISO or COSO ERM perspective. And finally, we'll wrap up with the conclusion that ties everything together, showing how TPRM strengthens trust, compliance, and business resilience. Whether you are learning, building, advising, or making or managing risk, this video will give you the clarity, structure, and insight you need to understand TPRM from the grounds up. So hit that play button, like and subscribe, and let's dive into the world of third party risk management where every connection counts and every risk can be managed. Let's get started. This is your host Savit Vittal Salian. Namaskar. Let's now look at cybersecurity risk commonly posed by third parties. The first one is unauthorized access. Vendors may be granted excessive privileges or fail to protect credentials, leading to unauthorized access to enterprise system. In simple language, it means unauthorized access happens when someone who shouldn't be allowed gets into your system or network or data. In the context of TPRM, this can happen if a third party vendor has either too much access to your system or data, or doesn't secure their own system properly, or they share their credential or access with others, or they still have access even when their contract had ended. Even if your own systems are secure, a careless or a compromised vendor can become a backdoor for cyber attackers. This can lead to data breaches, ransomware attack, or business disruption. So, managing third party access is critical to protect your business. Let's try to look at a checklist of items which can help in this space. The first is defining and enforcing what systems or data each vendor can access. Now, this is a primary activity on the scoping of the vendor with respect to your assets and services. If that is done properly, this part can be managed better. Next is giving vendor only the minimum access needed to do the job, nothing more than that. Now, this requires granular control in your system. Your system should have that level of granularity that you can only cut out those rights which are required to do exactly what they are asked to or they are entitled to. Use named account and assign roles with appropriate permission. Next is enforcing strong passwords, two-factor authentication, and login monitoring. Now, these are very basic. This is something which any good organization would already have. It is just about extending these to your vendor. Now, this also is about change control. You need to grant access only for the duration of a specific project or activity or changes for the time frame that is being agreed upon. This is where your change management comes into play. This is where your ID and access management comes into play. This is where your grouping comes into play. The intention here is giving what is required to the time that is required to the person who needs it to get it, and having a monitoring in place to ensure they are doing what they are supposed to and nothing more than that. We need to track vendor activities through their logging and alerting for any unusual behavior. Now, what defines unusual behavior? It's something that you'll have to define specific to that vendor and to the rights that they are supposed to have. Now, basically, it boils down to how well is your logging. What all are you logging and how is your SIM configured to provide you with this alert? Now, this is not something for a vendor. This is in general your organization should have already. It is just extending that to the vendor and their IDs and rights. Regularly check if vendor access is still needed and remove unused account. Now, this part is something which can be done proactively if it is a system based. There is a process, or as a last resort, the monthly review of access. Now, in that monthly review meeting that you have with your vendor, important is two part. First, those who have moved out and those who are supposed to move out in the next 30 days. Do note, you might have a meeting on 1st and there might be a resource in the vendor side who would have gone out on 3rd, and your next meeting is again on 1st. So you might have a delay of 28 days if controls are not in place. Hence, during your monthly meeting, you need to ask these two queries. One is, how many of the current supporting staffs have moved out? Check against your list, and if it is the access is still there, remove it immediately. The second part, which is more proactive, is asking your vendor how many are going to go out for the next 30 days and when. Normally, any resignations and movement is within the 30 days. Some might go for 60 or 90 depending on the contract that they have. Having said that, it gives you a better grip on staff movement. Also, to check with them whether any staff has moved roles. If it is a big vendor, they might be supporting you in many aspects. So, they might be supporting you in, say, database support. Later on, they might move into some other products. They might not need the database access. So, you have to check even that aspect of it and proactively disable it, at least on the last working day. Having said that, let's move forward. The next is include clear rules about access permission, audits, penalties in vendor contracts. Now, penalties, you would have general SLA penalties, but there is extra penalties which you would have to pay in case of breaches with your own regulators. Think through the penalties that you might have to pay up in case of a breach. Now, when you are drafting your contract, check out the feasibility of passing on to your vendor. Is that even a feasibility? Because in some cases, the penalties might be higher than the overall contract value. But then, this is a place or opportunity to check out what are the losses that you can cut down. Because if you have not done it, but your vendor has, the vendor need to be penalized. So, have that penalty clauses included to an extent possible. Next is immediately remove or access when the vendor relationship ends. Now this should be pretty straightforward, but it is a complex process because if you have not bucketed the access in the right order and it is spread all over, you might find it difficult as to who is which vendor. So hence, onboarding, if done cleanly, offboarding becomes easier. Next is review how vendor protects their own access systems and credentials. Now this would require an SME from your side to do the review. Bring in the SMEs. Let them go and investigate, review, do a test, an audit on the vendor part. That would be helpful and useful for you. Insecure software or code dependency. Third party applications and APIs can contain vulnerabilities or malicious component, especially in open source ecosystem. Let's try to understand this. When you use a software from a third party vendor, you are also using their building block or the code libraries they use to create it. These blocks, called code dependency, often come from other sources like open source project or other vendors. If any of these dependencies have security flaws, they can create a hidden risk in your system. Hackers often target known vulnerabilities in outdated or unpatched codes. This means that even if the main software looks safe, a problem in one of its parts can allow cyber criminals to steal data, install malware, or take control of your system. So, in TPRM, it is important to make sure your vendor manages their software supply chain securely. So, how do you do it? Let's look at a checklist. This should give you an idea about what is that you can do, and you can build on these. Starting off with asking the vendor to provide a list of all third party components and library they have used for their softwares. Ensure the vendor regularly update their code and patches known vulnerabilities. A good checklist would be, in this case, asking the vendor when was the last patch done or what was their patch management process and policy. Ask for the last 1 year patch schedules that they have. If the vendor is serious, they would have a patch schedule already in place, which is those patches which they have implemented as when it was found that there is a gap. Look at their policy, look at their process, but importantly, look at the last 12 months of patching schedules that they had for their software. Now, if the software that you are buying is already a year old or more, you should be able to see all the patches that was implemented in the last 12 months. This is a good indicator if they are able to demonstrate it. Else, the vendor might say that they have a policy, but there is nothing to substantiate it. There is no backend data. This is a red flag. Next is to check how vendors track and manage risk from open source components. Now this comes from their own security policy or patch management process. Verify if the vendor follows secure development standards, or what is it they follow in the first place. Do note, this is an area where you would need your patch management team, your security team to come in to review the claim made by the vendor and scrutinize their process. Do a risk assessment on this process because this is critical for running your operations. Confirm that the vendor regularly scans their software and code for security flaws. In this case, ask what they do. How do they know about the flaws? How do they scan? What is their process? What is the policy on finding vulnerability in their own softwares? What is the life cycle they maintain? And test this life cycle. Ask whether the code is reviewed manually or automatically for security issues. While it is known that doing a manual will not be effective, it's not a guarantee that automatic review also is foolproof. So you have to use this in combination to the previous checklist. Your idea is to find out how reliable their development process is. Ensure the vendor evaluates and tests any external code they use. Ask them what is their procedure, what is their process when they import an external code. What is their mechanism to test those codes which they are getting into their own software? What's their mechanism? What is their onboarding process? Do they have an onboarding process in the first place? Request independent security testing of critical application, especially web-based, but it's not restricted to only web-based. This is testing done by you or external vendor. Now, if your vendor is already having an external tester, do review it. But it is always important to verify against your own testing. Take a sample testing and figure out how it works. Get your penetration testing team to do a review. It might throw off some surprises which the vendor would also be surprised to see. So there is no harm in doing that extra steps. It just ensures that you are not adding a risk to your environment. Include terms requiring secure coding, timely patching, and disclosure of vulnerabilities. This is on the process side of it. Include penalties into this, because these are all small gates and windows which can compromise your system. Your system compromised means your customers are impacted. If the customers are impacted, there are potential damages, penalties. So if your vendor has been the trigger or the entry point for these vulnerabilities and you are paying for the fines and penalties, I think it is fair to incorporate these into your agreement at the very start. Ensure vendor notifies you if a vulnerability is found in their softwares. First, look at how are they themselves finding it out. What is their mechanism? How early detection systems they have. First of all, if they have. And then you can build on it. Data breaches. Vendor may lack robust encryption methods, access controls, or monitoring, exposing sensitive data to theft or losses. In simple terms, a data breach happens when sensitive information like customer data, financial records, or login credentials are accessed or leaked or stolen without permission. In the context of third party risk management, a breach doesn't have to happen inside your company. It can happen at a vendor like a cloud provider, software provider, or outsourced support firms. If that vendor has access to your data or system, their breach becomes your problem. Data breaches can cause financial loss, legal penalties, damage to your reputation, loss of your customer trust. So, TPRM helps you reduce the risk of data breaches through strong contracts, security checks, and constant monitoring. Now, how do we go about managing this? From a checklist perspective, you can assess the vendor's history of breaches, understand their security posture, understand their data handling practices. Security postures and data handling practices can easily be understood by looking at the documentation they have, if they have. If not, it's a red flag, back out. With their postures, documentation on their security posture and data handling practices, you should have a fairly good view about where they stand against your requirement. In case the gap is big, then you have to look at whether you want to go with the vendor. But the gaps are minor, then the negotiation should be to reduce the gap. On the history of breaches, this is two ways. One is asking the vendor on the breaches, or second, looking on the net or in the community. Breaches generally are broadcasted either from the vendor or from outside, which are pretty easy to find. To get the breach history, trigger your internal cybersecurity team to investigate. You should be able to find any history of this vendor. Next is only share data that's necessary. Do not give vendor more access than needed. We discussed this specific point in detail in the earlier presentation. So I think we understand the context here. Next is ensuring vendors use encryption, firewalls, and intrusion detection to protect the data. Now, for this review, ask for their documentation. Look at the documentation, what they have, which defines their policy around encryption. Look at the architecture diagram with respect to your assets or your support. Check out their firewall policies. Look at their intrusion detection mechanism, structure, architecture. This should give you fairly a good idea on where they stand and with respect to what you are expecting from them. Include in the contract a clear rule that vendor must notify you immediately if a breach occurs. Now, this is a repeated theme in almost all of the checklists that we have looked at in the past. Next is making sure the vendor complies with the data protection law. Again, a repeat, but a very important one, because this is critical, because if they are not, then this is a very big piece of effort that the vendor would require to invest in, and you can't onboard them till the time they are in. So it is a showstopper if things are not in place, specifically from a data protection law that you are expected to follow. Continuously monitor vendor cyber risk rating and threat intelligence feed. Now, the threat intelligence feed is something which can be done by the organization, that's your organization, adding this vendor into the list on the watch list. This should give you an idea. Of course, we should make the vendor accountable for informing you about anything which is cause a risk to them, in turn causing risk or harm to you. Next is your incident response plan should include roles for the third party. We agreed this is critical in the past, but then this is a place where your incident response procedure and processes supersedes anything that the vendor has. What matters is they should be aligned to you, not that you align to them. So that's very critical. Yes, if there are best practices that they have, you can incorporate them into your process, but what's a given is they would have to follow all that you have in your plate. Next is adding penalties or consequence in contract for failure to protect or report breaches. Include the clause to audit vendor security practice and breach handling procedure, and conduct a root cause analysis and review controls after any third party breach. Now, this is about any breach in which a vendor is involved, either directly or indirectly. Making a vendor participate in your incident management, in your problem management, and your RC analysis is mandatory, should be documented and agreed upon. The vendor cannot go away and be a silent partner. They have to be actively involved, because if there is an issue on the vendor side, the vendor is expected to deliver the fixes. Compliance violations. Non-compliant vendors can cause the primary organization to violate regulatory requirement, leading to fines or sanctions. Simply put, compliance violations happen when a third party vendor doesn't follow legal or industry rules like the one defined in GDPR, HIPAA, PCI DSS, or RBI guidelines, or similar such rules. or any other data protection rules that's applicable for your industry or for your region that you are operating in. If your vendor mishandles customer data or fail to secure their systems or doesn't report incidents properly, your company can still be held responsible. That means triggering of fines, legal actions, damaging your reputation, or loss to your businesses in any form and shape. In TPRM, you need to ensure that all your vendors know and follow the rules that apply to your business, especially when they handle sensitive data or data related to financial transactions or regulated services which they are managing on your behalf. So, how do we track this, manage this? From a checklist perspective, here are few. You can look at it and build and refine it to your industry and your business. So, starting off with, first identify which laws and standards apply to your business and third parties. This should be known to you before even you are engaging with the vendor. That is something which is given. Next is ask the vendor for proof of compliance. This is going to be critical because ideally, when you list out the vendors, before you even put up your vendor list, you would put up your requirement and then ask the vendor to see whether they are in compliance before they even apply for the tender or for the contract. The recommendation is eliminate all the vendors who do not follow or have proof of compliance to these standards. So that reduces your overhead in the first place. If a vendor declares that they are already in compliance and they are able to show you a proof, this reduces your overheads. So eliminating at the source itself is the recommended approach. The next is using structured assessment to verify vendor policies and processes. Now, how to do it? One is we can ask the vendor as to how they have got the proof of compliance, what was their test, what was the result, the full documentation that would be associated which helped them to declare that they are compliant. That's one way. Take that and then you can trigger an internal review. The specialist within your organization who manages your GDPR, PCI DSS and so on and so forth, they can review those documentation and if required can conduct a test or a review or small audit maybe to ensure that what has been claimed and what they have matches and they are in line with what you are expecting of them. The next is including clauses that require vendors to follow relevant compliance regulation on the go. And in case for some reason they are not able to, ensure you have a documentary evidence or they inform you in a formal way so that you can do a risk assessment. But making this mandatory as part of your monthly review, wherein they declare if something is not in line, helps you to take control of the situation earlier. Ensure you can audit the vendor compliance practices, a very standard practice. Sign a DPA or the data protection agreement or similar document where vendor processes personal or regulated data. Now this is applicable only if the vendor is processing personal or regulated data. Now whether they will do it or not is part of your requirement. So even before you get a vendor on board, you are very clear whether a particular vendor is required to process your personal data or not. Because if it is yes, then you need to have this DPA in place. You would need to have an audit in place. You need to have a control or testings in place to ensure that compliances are always maintained. Requires to make the vendor to notify you quickly of any incident affecting regulated data. This should be a no-brainer. The moment the breach is identified, do not keep a time delay. Do not put up a definition of we need to get this info in 30 minutes, 60 minutes or so. Make it ASAP, instant. The moment they identify it, even if it is a suspect, it's a potential, make it a point that they inform you immediately. If at later stages it is found to not be accurate or incorrect, it can always be managed. But if you are not informing and it turns out to be true, maybe you have lost precious time. So having the breach reporting timelines defined is critical. Confirm compliance with data transfer laws. Now, if a vendor is a global vendor and they are providing services or hosting services in multiple locations, you need to be aware of it and factor in the GDPR aspect. If the data belongs to EU, then you have additional scrutiny. So bring in your GDPR expert to review this aspect of that vendor. Periodically check if vendors maintain their certification and update practices. Now, the first part on certification should be straightforward. When a certification is provided, it is provided with a validity. Ensure to record it in your system and make it a point that the vendor informs you about the recertification. That should start way before the expiry. Having said that, your own internal checks and balances should be that you are aware that there is an expiry coming in of the certification of your vendor. Hence, you have to bring this well in advance to the vendor's attention that you are aware and you are expecting the vendor to be aware and doing all that is required to ensure the certification stays valid and relevant. This is where your monthly meeting comes into. You don't want a situation where your vendor has expired certification or is in the process of renewing, but during that period your vendor certification has expired and you are held in breach in case of an incident or a review. You don't want that situation to come in. Hence, proactively a monthly review helps. Include terms of consequence if the vendor violates compliance rule. This is critical, but more importantly, include the penalty clauses in case there is a violation. You don't want a situation where you pay $1 million and the vendor gets away with it because it's not part of your contract. Hence, factor this in your agreements. Poor cyber hygiene. Vendors using outdated patches, weak passwords, or inadequate logging may serve as a weak link in the cybersecurity chain, hence directly impacting your own operations. In simple terms, cyber hygiene is like a digital cleanliness. It means following good security practices every day. It's like using strong password, updating system, and not clicking on suspicious link. If it's part of the vendor's DNA, it ensures that you are secured. But is it part of the DNA? That is something that would need to be reviewed before you sign. Do a thorough review on their documentation because all that they do would be there in the documentation. If they mention anything which is beyond but not documented, it also shows a weakness in their internal process. If the missing documentation is come out in your review, it's a red flag to exit that vendor. Hence, when a third party vendor has poor cyber hygiene, they might use, example, weak password. They might skip software updates. They would have or don't have a process wherein alerts are notified, basically ignoring the alerts. You can identify if they are sharing their accounts among the staffs. Very easy to identify. Bring in your ID and access management experts when they review this aspect. They forget to back up their data. Look at their backup policy. They should identify gaps in this. So, your identity and access management team, your software development team would be required to come when you look at this aspect of the risk. These careless habits, if the vendor is having, make them easy target for hackers. And if the vendor is connected to your system or handling your data, that bad practice can put your business at risk. So, in TPRM, you must check if your vendor follows basic cyber security rules all the time, not just on paper but in practice. Recommended to do a small audit or a review on these aspects because this has dangerous impact on your business in the long run. So, how do we do it? Let's look at a checklist of items. You can enhance this based on your own internal requirement. Starting off with ensuring vendors are using strong password and are enforcing multi-factor authentication. Now, what defines a strong password? This definition should be your definition. Very clearly articulated, documented, and agreed by the vendor. So, a definition of a strong password should not be different from what you are having. Yes, they can have higher, but they cannot have lower than what you have. Have a detailed scrutiny of their guidelines or the standards that they follow. Confirm that systems and applications are regularly updated and patched. This would be visible from their patch management process and policies, and also what they have implemented in last 12 months and how they have done it, right from identification to the actual patching. Look at the timestamps. That will show what they declare as their process and what they implement matches. Ask if the vendor uses antivirus, endpoint protection tools in all the system. Generally, all vendor would say they do. But as I said, you trust them, but you have to verify what they say based on hard facts and data on the ground. Check if the vendor provides regular cybersecurity training to its employees. It's important. This is generally a weak spot. Vendor assumes the staff knows. The staff doesn't know what they are supposed to learn for the work that they are doing. The vendor might cut down on cost with respect to training, but that can prove costly and expensive for you. Review how vendor laptops, mobile devices, and Wi-Fi's are secured. Look at their process and policies. This is a place where your cybersecurity team can do a short review. Ensure vendors have protection against phishing and email-based attacks and other such attacks that is prevalent now or during your review. Verify a regular data backup process and safe storage method. What's their storage methodology? What's their policy? What's their backup policy? So in this, bring your backup team into play. They can do a refined job in reviewing this. Ask if vendor monitors their system for suspicious activity. The answer would be yes, but are they or how are they doing it? This is where your cybersecurity team or the vulnerability management team can play a role, a very critical role. Ensure default passwords are changed and system follows secure baseline settings. Now, default password change should be in line with your policy. And baselines should be strictly the baseline that you follow for your system in your organization. Now, if the vendor has shared infra, what you should be insisting on to ensure that they are having at least the baseline that you are having. Anything which is a deviation, check out whether it is in conflict to yours. They can definitely have better or a higher standards there if it is a shared resource. But if it is a dedicated resource or infra for you, there should be no negotiation. You want all in compliance. Ask for and review their cybersecurity policy or acceptable use policy. First review, compare with yours and see the deviation if there are any on their part. Tools and technologies supporting TPRM. Modern organizations are leveraging a range of tools to strengthen their TPRM efforts. TPRM platforms like Archer, Process Unity, OneTrust, and Prevalent are used to automate assessments, track risks, and manage their workflows. Security rating services such as BitSight and security scorecards are used for continuous external monitoring. GRC platforms are used for integrating TPRM into enterprise wide governance, risk, and their compliance strategy. SIM and threat intelligence tools are used to correlate vendor based threat with internal telemetry. In simple terms, managing third party risks manually can be a slow and prone to errors. That's why many companies use special tools and technologies to help automate, monitor, and manage their third party relationship more effectively. These tools helps you to keep track of all vendors in one place. This tool help you assess vendor risks using questionnaires or external data. The tool helps in monitoring the cybersecurity score in real time. It helps in managing your documents, contracts, and their compliance report. This also helps you to get alerts of any breaches or threats related to your vendors. In simple terms, TPRM tool acts like a smart dashboard that helps you stay organized, save time, and thereby reducing the risk when dealing with external partners. Now, how do we go about doing it? Let's look at a checklist, and you can rebuild on this based on your personal requirement as per your organization's requirement. Starting off, for vendor risk management, you can use platforms like Archer, OneTrust, Prevalent, and so on. From a third party inventory management perspective, ensure the tool can track and categorize all your vendors in a central dashboard. You can get it off the shelf, or you can build it internally, or you can use your current tool and add features to it. Ideally, you can have this in your inventory management tool. Your CMDB can be a module within it. So you don't have to reinvent the wheel or invest a lot of money on starting off with a fresh tool. You can send from an auto asset assessment perspective, you automate sending, scoring, and reviewing vendor risk questionnaires on a periodic basis using the tools that is available. From a security rating tool perspective, you can use tools like BitSight, Security Scorecard, or UpGuard to monitor vendor cyber health. From a document and contract repository perspective, you need to ensure that a mechanism where you can store your contracts, compliance report, SLA, and risk assessment. You can use your existing tool of managing these for your own internal operations. You need to have a alert notification mechanism to get real-time alert about data breaches, risk score changes, or any incident. Recommended is to make the vendor follow your tools, your incident management process as much as possible or where feasible. Maintaining logs and report for audit, compliance check, and board reporting. You need to have a mechanism where it can be generated. You can ideally use your current tool. Every organization generally has all of these. All the good organizations definitely have these in some form and shape. Rather than reinventing, extend this to the vendor. Ensure that TPRM tool connects to your existing systems. Now, connecting to the existing system is the fastest way to get things onboarded. Having said that, it is also a risk because the moment you get it connected, if any vulnerabilities or any gaps in your vendor, it can seep into your system. So before you do that, doing a pre-assessment on the vendor for all the checklists that we discussed till now is recommended. The next is use visual dashboard to compare and rank vendor based on their risk level. Now this is something which your vendor management team needs to work out and place it, because it is just not for a single vendor, it's all the vendors that is supporting you as an organization. Track if the vendor complies with relevant regulations. This is where your audit management team or regulatory management team need to figure out the tools that they are currently using internally and figure out how these tools can be provided access to, so that the vendor can feed in their inputs. Just ensure that you have checks and balances so that they are not in any way able to contaminate your current data. So need to be careful. It can also be they have their tool and you have your tool and you have an API in between for passing on the information. Ideally, it would be one way from the vendor to you, so that you know what's in, but all your data need not go there. You can have a mechanism which works for you best. TPRM in the context of cybersecurity framework. Several cybersecurity frameworks embed TPRM as a core function. Example, NIST CSF 2.0 includes a dedicated supply chain risk management category within the identity function. In ISO 27001, it mandates third-party security consideration in NXA controls. Under DORA, it highlights ICT third-party risk management as a compliance pillar for financial institutions. Whereas in Basel 3.4, it emphasizes outsourcing and third-party risk under operational risk components in the banking sector. Simple put, cybersecurity framework like NIST, CSF, ISO 27001, GDPR, DORA and others are like rule books that guides organizations in protecting their data and systems. These frameworks don't just focus on your internal security, they also expect you to manage the risk from your third party vendor perspective also. Why? Because vendor often access your data, your systems or your applications. If they are not secure, your organization is still at risk. Even if your own internal systems are completely secured, the vendor can induce the risk. So, cyber security framework requires the company to identify its risky vendors. It requires assessment and monitoring them regularly. It requires to include security requirement within the contract. It's required to plan for incident involving third parties. This is why cybersecurity frameworks are required. Following this framework helps your organization stay compliant, thereby reducing the risk and avoiding penalties. Now, how do we go about doing it? So, from a checklist perspective, let's look at some which I have listed here. Yes, you can build on it, refine it, make it more sharper to within your space. Starting off with maintaining a full list of vendors and their access level. These are regular themes which are popping up in many of the checklists discussed earlier. Performing initial and periodic self-assessment or assessment of third parties. Do note, initial assessments are generally done, but periodic assessment is a gray area. So, initial assessment would be done in order so that it can be quickly onboarded. But post that, it's a different challenge. No one would like to do it back. There is a lot of investment, time, and effort. But that's where your policies need to come into play, making it mandatory. The frequency can be defined and agreed on. The next item in the checklist is to include cyber security expectation and breach reporting clauses in the agreement. Next, ensuring vendors only have access to what they need and no more. Confirming vendor comply with the data protection law and sign the DPAs when needed. From a continuous monitoring perspective, track vendor performance, cyber ratings, and changes in their risk profile. From an incident response perspective, it's ensuring third parties are included in your cyber security and response plans. From an audit perspective, including right to audit vendor security practices and asking or insisting on compliance proof should be embedded in your agreement. Subcontractor oversight, ensuring vendor manage risk from their own vendors called as fourth party. Next is map your TPRM activity to specific sections in one of the framework, either NIST or ISO or NXA, etc. Do note, I have listed out the framework and against each, like vendor inventory, reference the NIST and ISO, risk assessment, NIST, ISO, GDPR, data protection, GDPR, continuous monitoring, you can use NIST or DORA, audit rights, you can use references from ISO and DORA. Best practice for effective TPRM. Listed few, there are many more, but these are something which comes as the top, but let's go through it. First, establishing a cross-functional TPRM program. This involving IT, cybersecurity team, legal team, procurement team, compliance team, business unit. These are teams which need to come together. So having a cross-functional TPRM program helps bring in efficiency, plus it is more effective and efficient. This has always helped when an organization puts this structure in place. Next is adopting a risk-based approach. Do note, not all vendors require the same level of scrutiny. Focus effort on high risk and high impact relationship. Doing this saves time and money. You don't need to boil the ocean. Pick and choose your fight. Pick and choose the one where you want to go deeper, which can affect you the most. You have to hit it first. Educate your internal stakeholder. Make business unit aware of TPRM responsibilities when engaging the vendor. Now, this is a major challenge most organizations have to go through. The business is focused on what they do, which is doing business on that specific area of interest. TPRM is normally seen as an overhead, seen as someone else's problem. Hence, educating your internal stakeholders is critical if you want to ensure they are supporting you when you go deeper. While you have to understand that the business interest is to get into market ASAP, but it is also important that you make the business aware about the risk of compromising on the checks and balances that you need to put in for each vendor. The business is smart, it just needs to be made aware of the risk. Do note, this is not their specialty. The specialization is with you. But you need the stakeholder to be in line with your understanding in order to avoid any friction later on. Friction is a reality in this business. Regularly update your risk criteria. As threat evolves, so should your risk assessment template and scoring model. This is where your risk management team comes into play. Keeping a tight vigil on each vendor and their risk need to be maintained by the risk team, individual risk teams. It could be vendor specific risk team, business specific risk team, and so on. But there should be a line of sight and visibility. From an audit perspective or improving the process, you have to need to perform internal and third party audit to validate effectiveness and maturity of your TPRM process. Do note, generally people are effective in this space when they are onboarding. They might be an effective of 100%. But when it comes to continuously monitoring, this is where you break. This is your weak link. The landscape would have changed and you would still be looking at an old data. Hence, your risk team or audit team should have TPRM as a regular feature in all the audits that is in the pipeline for that year. Do note, you don't want a surprise post an incident that you go in and do an audit and find, there was a gap here. Too late in the game. You would have already paid up the price. In simple terms, managing third party risk isn't just about checking a box. To truly stay safe, organizations need to follow best practices that makes TPRM part of everyday business, not just a one-time review. Best practices helps ensure that you have chosen the right vendor, you have caught the risk early on. Security aspect is built into the contract, including the penalty aspect. You are up to date on the situations on ground in order to avoid any surprises. Your company is protected legally, financially, and its reputation is also protected. So this is how the best practices should be designed. Think of it as creating a smart, repeatable, and secure process for working with all external partners. From a checklist perspective, you need to create a dedicated process with roles across IT, procurement, legal, and compliance perspective. You need to keep a central inventory of all third parties with access to your systems or data. You will need to categorize vendors by criticality and risk levels. You will need to assess vendors' security, their compliance posture, their financial health before they are onboarded. You need to add clauses for data protection, their access limits, their breach notifications, and inbuilt audit as part of the agreement. Regularly assess their risk, track their performance, and update their risk score. Try to get the vendor who is aligned to one of the multiple frameworks, definitely those which you are aligned to, whether it is NIST, ISO, GDPR, DORA, or any other applicable standards for your business. Educate employees on vendor risk and their role in the TPRM process. Make sure vendors are part of your security drills and your crisis plans. Review the TPRM process regularly and improve based on the audits and the lesson learned. Let's now look at top laws, regulations, guidelines, and frameworks for TPRM in BFSI sector. From an international law perspective and regulation perspective, we have GDPR. The scope here is data privacy. It covers data privacy aspects in detail. From a TPRM perspective, it requires data controller to ensure third parties comply with data protection rules. The next is the Graham-Leach-Bailey Act or GLBA. The scope in this case is the financial data security. From a TPRM perspective, it requires financial institutions to ensure vendor maintain safeguard to protect customer data. From an EBA guidelines on outsourcing agreement perspective, which the scope is banking operation, it defines expectations for outsourcing, including risk assessments, exit strategy, and ICT risk. From the Digital Operational Resiliency Act perspective, or DORA, the scope in this case is third party risk from ICT perspective. It's about setting rules for managing ICT providers, testing their resilience, and reporting third party incidents. Now, you can use these laws and regulations and go deeper into it and see which are the other aspects within which can be used by your organization to ensure compliance. These laws are in itself a detailed aspect that need to be covered in. I have covered DORA and some other aspects. You can look at that video to go for additional details or information that you might be interested in. You can check my other videos in the series. In summary, from a GDPR perspective, it focuses on data processing agreements, sub-processor controls, breach notification, and audit rights. From a GLBA perspective, it focuses on vendor security, contracts, ongoing monitoring, incident response, and a broad oversight is maintained. From a EBA guidelines perspective, it is about criticality assessment, outsourcing registers, maintaining it, risk analysis, having an exit plan in place, and defining detailed contract clauses. From a DORA perspective, it is about having ICT third party classification, resiliency testing is documented and performed, having contractual standards in place, reviewing concentration risk, and about how incidents are reported and managed. If you go a little deeper into GDPR, the focus, as we mentioned, it's about protecting personal data when third parties are involved. Now do note, third parties are called as data processors in GDPR terms. The top 5 requirements from a GDPR perspective for TPRM is data processing agreement. Means it must be signed between the controller and the processor, clearly outlining the roles, responsibilities, and data protection clause in mentioned Article 28. There are a few other combinations of it. You can go deeper when you look at the GDPR documentation. The next is performing your due diligence and vendor vetting. Controllers, that's you, must assess third party processors' ability to meet GDPR standards. So this is you as an organization responsibility to review the vendor. The next is to ensure you have a right to audit. Controllers must ensure they have the right to audit processors or receive their audit reports. There should be a clear breach notification process in place. Processor must notify the controller without undue delay if data breaches have occurred or if there is a potential of this happening. From a sub-processor control perspective, processors must get written approval before using other sub-processor and ensure the same level of data protection is maintained. So these are the top 5 from a TPRM perspective in GDPR space. Now if you look at GLBA, which is the Graham-Leach-Bailey Act perspective, here the focus is securing the customer's financial data, including vendor management under the safeguard rules. Now, there are few points here. One is vendor security assessment. Financial institutions must ensure vendors have controls to protect customer information. Agreements must require vendor to implement appropriate safeguard. This should be part of your contract. Institutions must monitor their vendor activity and reassess their risk periodically. This is as per the ongoing monitoring aspect of GLBA as defined by them. From an incident response perspective, vendor must be included in the institution's security incident response plan. It's basically getting your vendor aligned to your incident management process. Vendor risk must be part of the institution's overall risk management strategy with board level reporting. This is not something in a different universe. Board level, that's your board level, should have clear visibility on any vendor risk, small or big. So that line of sight is required for the board. From a EBA guidelines perspective now on outsourcing, which is the European Banking Authority, the focus is ICT and operational outsourcing risk in the financial sector. Their top 5 TPRM requirements are classifying outsourced function as critical or non-critical based on the impact. Next is performing detailed risk assessment before outsourcing, including concentration and country risk. They must include data access, confidentiality, audit rights, and termination rights within the agreement. EBA defines that this must be in place for safe and orderly exits from third party relationship if the situation arises. But this should be part of your document. This exit strategy and business continuity. This is where the EBA guidelines comes into. They must maintain an internal registers with key details of all outsourced services. This has come up in many other regulations also in the past. The next is the Digital Operational Resiliency Act or DORA. The focus of DORA is managing ICT's third party risk in financial sector. Here it says should identify and monitor critical ICT third party service provider. Monitor, identify first and monitor. Contracts must include security standards, audit rights, availability, integrity, and incident handling clauses. While audit rights, availability, integrity, and incident handling were also defined earlier in the earlier laws, standards, security standards should be part of your contractual obligation. This is something which has been added in DORA. So basically your security standards should be the baseline for the vendor to be in compliance with. From concentration and sub-outsourcing risk perspective, monitor if multiple critical functions are concentrated with one provider or across a few. This is to avoid concentration risk. Do you have a vendor which manages anything and everything for you? That's a concentration risk. Or have you been smart enough to delegate or break it so that you are not in a handicap by a single vendor? That's a risk no organization can afford. Next is incident reporting. DORA defines, it mentions actually, ensures third party report incident that affect the financial institutions, service or customers. They need to report this incident, their incidents to you, and that's where DORA's guideline comes in. Resiliency testing need to include ICT vendors in operational resiliency and scenario based testing exercise. Now, scenario based testing exercise is an addition in DORA. So you need to have a clear set of scenarios defined which you would use for your own internal, and you might have the same or additional tweaks and additions when you are managing scenarios with respect to your vendor. Now let's look at India's specific laws and guidelines. We have few. We have the RBI Master Directions on IT framework. We have RBI guidelines on outsourcing of financial services. We have IRDAI guidelines on outsourcing. We have certain guidelines, and we have the DPDP Act. Authorities are spread with RBI, IRDA, and Ministry of Electronics and IT. But the focus is from an RBI Master Direction on IT framework. The requirement requires the banks to assess, monitor, and control risk from outsourced IT activities. From a RBI on outsourcing on financial services guidelines, it mandates due diligence, contract clauses, audit rights, and business continuity planning. So this is where it comes from. From a IRDAI perspective, it requires insurers to identify, monitor, and mitigate risk from third-party service providers. From a certain guideline perspective, it requires reporting of cybersecurity incidents involving vendors within strict timelines. From a DPDP Act perspective, it requires data fiduciaries to ensure that third-party processors handle personal data securely. If you go a little deeper on RBI Master Direction on IT framework, from a vendor risk assessment perspective, it defines conducting thorough risk assessment before engaging IT service provider. Due diligence is about evaluating financial, technical, and legal competence of vendors. Contractual security clause means including provisions for confidentiality, data ownership, access control, and audit rights. From an ongoing monitoring perspective, it's about continuously monitor the security posture of third party. From a data localization and protection perspective, need to ensure vendors are handling critical data hosted within India and protect it against any breach. From an RBI guidelines on outsourcing of financial service perspective, the focus is governance and risk controls for outsourced financial activities. For board and senior management, responsibilities for outsourced activities lies with the regulated entity. Now the board and senior management should be aware that RBI guidelines mandates it. Second requirement is having due diligence before outsourcing. Need to assess vendors' capabilities, its reputation, and their track record. You can't say I was not aware. It is part of the requirement. The guidelines mentions it to be done. You can't escape at a later stages. You have to do enough due diligence before you sign that contract. So if you are having business in India, you are governed by this. From a comprehensive outsourcing agreement perspective, it should cover confidentiality, business continuity, audit, and regulatory access. Do note, the regulator can come and access not only your process and assets for review, but also your vendor. Do have this discussion with your vendor. Make the vendor aware of this. It shouldn't be a surprise. And make it as an important clause within your agreement. From a monitoring and review perspective, regularly monitor performance, compliance, and risk metrics of vendor. This regularly is at least monthly. From an exit strategy perspective, maintain a plan to smooth transition services in case of contract termination or case of vendor failure. This comes out in almost all of the guidelines and the regulations that we have seen till now. From IRDA perspective, for TPRM, the IRDA focuses regulatory controls over outsourcing by insurance companies. In this case, your policy, outsourcing policy, insurance must formulate a board approved policy on outsourcing risk. From a materiality assessment perspective, you should be able to classify outsourced function as material or non-material, based on risk and their impact. From a vendor due diligence perspective, you need to evaluate vendors' financials, their service quality, their data security, and legal compliance standing. From a contractual safeguard perspective, you need to ensure agreements contain clauses on data protection, regulatory access, and their terminations. From a business continuity and recovery perspective, you need to ensure vendors have adequate business continuity plan for critical services. Now, do note, you are accountable to ensure these are in place. The vendor can claim, but you need to ensure it is in play. So while you trust your vendor, how have you verified it? Do note, IRDA can ask you that question, will ask you that. So your vendor is following all of this. How do you know? If the answer is the vendor told you so, you are at the losing side of that conversation. You would need to show how you know other than what the vendor has said. What is the verification that you have performed? This is true for all the laws, all the regulations. The vendor can claim that they are all in line, but it's you who are signing off on those. So you are directly accountable to ensure that the vendor is actually in line with what they are claiming, or at least in line to your requirements. From a certain perspective, the focus here is cyber incident reporting and response, including third-party involvement. In this, from an incident reporting obligation perspective, entities must report cyber incidents, including third-party breaches, within 6 hours. That's the CERT guidelines. I'm sure most organizations have lower thresholds, so this should ideally be covered. But if not, do have this documented. From a security login requirement perspective, you need to maintain logs for all ICT systems, including vendor interaction, for 180 days. This is something which is missed. Documenting it, making the vendor aware that logs are maintained by them and you have access to it. There is no exception to this category. You miss out a day, you might have a penalty coming towards you. From a vulnerability management perspective, you should to identify and patch the vulnerabilities, including those in third-party applications. Check out how it has been maintained, how it's managed by your vendor. Extend your process and policies if possible to the vendor so that you know things are in the right order, at least following your standards. Cloud and MSP risk disclosure. Organization must disclose and secure data handled by cloud provider or MSPs. Coordinate with certain. Ensure third-party vendor cooperate during incident investigation and share forensic logs. Do note, the vendor need to be made aware there might be a conversation directly by CERT with the vendor, and they cannot say no. This is something which the vendor should be made aware of. The next is the Digital Personal Data Protection, or DPDP Act. The focus here is protection of personal data across all sectors, including BFSI. What are the top 5 TPRM requirements? First, data fiduciary accountability. The primary organization is responsible for third parties. Contractual control over processors. Define processors' obligation through binding agreements. From a data security and breach notification perspective, processors must notify the fiduciary of breach. Fiduciary must inform the data protection board. Do note, this data protection board is the board within your organization. You need to have a data protection board or an equivalent which is performing this. How this board looks like, its scope is covered in the DPDP Act. You can pull that and try to understand the guidelines around this space. From a purpose, limitation and consent, processor can only handle data for purposes agreed upon by the data principal. The vendor cannot go beyond the agreed boundary. Right to audit and review, fiduciaries must monitor and audit processors for compliance with the Act. Now, this is coming out regularly, audit as an aspect. In summary, the RBI IT framework in this vendor risk assessment, data protection, contract clause, monitoring, and localization is the focus. In RBI outsourcing guidelines, governance, due diligence, contracts, monitoring, and exit planning is the focus. From IRDAI perspective, outsourcing policies, materiality, BCP, vendor vetting, regulatory access is the core area of focus. From a certain guideline perspective, breach reporting, system logs, vendor coordination, vulnerability management is the primary focus. From a DPDP Act perspective, processor contracts, breach response, audit rights, accountability, and data purpose is the focus. With this, we have reached the end of part 3. At this point of time, we have covered the context, the drivers, key components, cybersecurity risks commonly posed by third parties, tools and technologies, TPRM in the context of cybersecurity framework, best practices, top laws, regulations, guidelines and framework for TPRM in the BFSI sector. So with this, we will pause here, try to take notes on what we have learned till now. Check out the list for each of these area that I have completed. Compare this against your current if you have. Build on this list if you don't. You can enhance it, you can modify it so as to it suits you and your environment. It should be practical for you, doable. Now, use this also to assess your vendor so that you are ensuring all that is required is in place. Now, that's from your perspective. For those who are in the other side of the fence, that is the vendor, you can take these videos and the checklist as part of your strategy. Prepare these in advance to as much as possible so that when you are bidding to provide services to financial institutions and organizations and you have all of these in place, your stature in that bidding would be higher against those who are not. So this works both ways. Now the situation should be win-win. A vendor requires business and the business requires a vendor to support it so that he can focus on other critical items. Now, when a business reaches to a vendor and the vendor is already in compliance with all that is listed till now, imagine how quick the business can shake hands with you and both wins. We will have 3 more aspects pending, which is key cybersecurity and risk management framework. We have comparative analysis, and then we'll have a conclusion over this topic. But that's part 4. At this point of time, I would like to thank you for the time that you have invested till now. I very much appreciate it. Thank you again. I'll pause here and I would see you in part 4. Namaskar.